So 5% was dedicated to alternative assets. That included real estate, it included hedge funds, and then it also included private equity and venture. So the allocation was so much smaller. Now, a lot of these institutional investors have increased their allocations from anywhere to 15 to 20%,
Wow.
really going after that alpha.
Welcome to VC Evolve podcast, conversations about the future of VC. Our guest today is Tracy Chadwell. Tracy is the founding partner at 1843 Capital. Among her notable investments is Beautycounter, a $1 billion exit, Tempo Automation that went public on NASDAQ, and May Mobility. Prior to 1843 Capital, Tracy was a partner at Baker Capital, a growth capital VC firm. And before that, she was doing cross-border transactions between the US and Asia. Tracy is a Kauffman Fellow. She is on the inaugural Forbes 50 over 50 list and on the Entrepreneur magazine's 100 Powerful Women. And I love this. She speaks conversational Japanese and restaurant French. Tracy, thank you so much for joining me today.
Hi, arigatou gozaimasu and merci beaucoup. Thank you.
Okay, so you know what? I tried to learn French once. I think I was 17 or 18 at the time. I do not remember anything. I only understood merci beaucoup from you.
It's a good start.
Okay. But I wonder, how hard is it to learn Japanese? Do you still practice it?
It's very difficult, and I do not practice it, unfortunately, and so I lose it on a daily basis, but try to go to Japanese restaurants as often as I can to practice.
Okay, sounds good. Let's start by the name, 1843. What's the story behind this name?
1843 is the year that Ada Lovelace wrote the first computer program, and I thought it would be nice to name the firm after a woman who was in technology long before the technology as we understand it existed. And also, too, one of the nice features is that being a number, we end up at the top of all the lists of venture firms. And as you know, there's so many, it's nice to be able to get to the top.
This actually leads me to a question about women in venture. According
Yes.
to a recent Harvard Business Review report, companies founded by women receive less than 3% of all VC funding. And
Yes.
women account less than 15% of check writers of the VCs. First, I want to hear your take on this. And second, what can we do to change that?
Yes, and I believe too that women who manage firms, we manage less than 3% of venture dollars as well.
Oh,
So
wow.
not just
Yeah.
tech writers of big firms, but then also too the women who are managing their own firms. And it's evolving. I think it is getting better. I think there's a lot of initiatives out there to help both women founders and women funders. And I think we bring an interesting perspective. So there's certainly value in having us amongst VCs as well as other people with different viewpoints, which I think is all very healthy. For example, one of the companies that we invested in actually just received a round of funding from Google Ventures is a company called MIDI Health, which is focused on menopause. I think Joanna has mostly women investors, if not all, because to really truly understand the problem, I think you have to be either aware of it or have gone through it yourself. And so that's why I think being a woman investor really can help. But we're also in the traditional spaces as well, like mobility and Web3.
Okay, so you mentioned that Joanna has mostly women investors, and I read something, I don't like it, but it's called the
Yeah,
attribution bias. And
yeah,
it
yeah.
says that women led startups whose first round was exclusively female VCs were 2 times less likely to raise a second round because people would assume that they got the funding because of their gender, not because of their merits. Have you seen this in the startups you invested in?
I have seen this. I don't invest exclusively in women. I invest in aging and longevity, but obviously, being a woman, I do have an eye towards investing in disadvantaged founders. I do get a disproportionate amount of them coming to me, which is a wonderful thing. But one of the things is that I have heard companies will come to me and they'll say, "Oh, we're an insurance tech company." And we went to all of the insurance focused venture funds and they all said no. And so we thought we'd try the women funds. And that's really frustrating to me because essentially what they're saying to me is we tried all the spaces that truly understand our business and that didn't work. So we thought we'd try a different angle. I think as long as that stuff is going on, it's just going to be a detriment to women. I really look forward to the day when people just think of me as an venture investor instead of a woman VC.
I fully agree. And
Yeah.
maybe to cover the whole spectrum, because now we talked about the VC, the founders, but also inside startups themselves. I used to work
Yes.
at Carta, and we used
Oh,
to track the compensation, the equity compensation for women versus men. And 47% of US labor force are women, but they only receive 35% of the employees or the equity offered to employees. And in 2021, only 27% of the total value of employee equity on Carta's platform were for women. So 73% of total equity went to men. Do you have any programs to educate your startup founders to just provide equal pay, nothing more?
right. Well, we certainly don't have a program that would do that, although I think you're right. I think that education and having open discussions about this is the first step in really making meaningful change because I think, all situations are unique. And even though we have statistics, each company is on a case by case basis. And who's contributing the most is obviously the person who should have the most equity. But then I think also too on the other side of things, maybe we could talk about it and have more awareness and also I know there's efforts to teach women to ask more because that's one of the things is that traditionally and I'm certainly not looping every woman in this basket, but traditionally, women have sort of waited for people to recognize that they're doing a great job versus actually speaking up for themselves and advocating.
Okay, so if we shift now to the VC model itself, do you
Yeah.
think the VC model is efficient or broken?
Oh my goodness. This is such an interesting question. And thanks so much for having me on and talking about this because I think, like everything, the venture capital industry, especially now that it's becoming a very efficient and mature business, is going through cycles. And you're going to have dramatic swings both ways. And I think we're seeing a little bit of the shakeout now, which I actually think is healthy. I think as long as the world still has a voracious appetite to participate in innovation, we're going to see lots of different people coming in, starting firms, lots of people wanting to fund firms and fund that innovation. But we're living the consequences of that now because the number of new funds that was started over the last few years was higher than ever before. In fact, when I raised Fund One, there were 84 new funds in market. When I raised Fund Two last year, there were 800 funds in
Wow.
market. So that's a tenfold increase right there. So we're seeing a lot of capital flow in and creating a lot of bad habits with founders, but the tide has gone out and dramatically again. And now we're back where this year only just over 100 funds were closed this year so far, which I think is really healthy.
What does that mean for LPs? Would this discourage more LPs in investing in VC funds?
I think we're starting to see different kinds of LPs come into the market. Historically, and wow, I've been in this business since the late 90s. So I've really seen a lot of cycles come and go. But the original allocation among larger limited partners, institutional limited partners, was 5%. So 5% was dedicated to alternative assets. That included real estate, it included hedge funds, and then it also included private equity and venture. So the allocation was so much smaller. Now, a lot of these institutional investors have increased their allocations from anywhere to 15 to 20%,
Wow.
really going after that alpha. And it's an interesting perspective because then they went and sort of, as I say, gorged themselves, in 2020 and 2021 on this asset class and really are having trouble digesting that. However, in the meantime, we've seen new interest from people from different countries wanting to participate in our innovation. So we see investors from Europe and from Asians, from South America getting involved. You're also seeing the mass affluent being interested in this asset class as well. So while the institutional players are pulling back, I think we are seeing newer entrants come to the table, which is a good thing and a bad thing, right? It's great to have more capital to invest in these companies, but then also too, you create a lot of inefficiencies. People just hire without consequence. There has been traditionally over the last couple of years no focus on margins, which I think is really unhealthy, and now we're getting back to that. So I think we're getting to a good place.
Okay. And how about the other way? You mentioned people coming from the international scene, investing in US startups. As far as I remember, there were many VC firms, US VC firms, who opened shop in India, China, even in Sweden, in
Right.
Berlin. Are we still seeing that trend, or are those VC
I,
firms focusing more internal now?
I think we are. I think we're continuing to see, as I say, as sometimes the apple gets sliced thinner and thinner because, we had a lot of innovation with the mobile phones and mobile devices and people being able to do things on their mobile phones. And then the next phase of innovation was, moving to cloud computing and edge computing. And now we're at another inflection point with the advent of AI and integrating that into the platforms that people build. So I think we're seeing another exciting time, but we've nobody knows how this is going to shake out. We're all watching where traditionally you wanted to be in all enterprise software because that was where the highest margins are. I think now people are really taking a step back and saying, how are we going to create a moat? If we're a startup and we don't have hold of all the data ourselves, how are we going to create an efficient moat? And so I think a lot of people have been going to different countries to sort of replicate models that have worked in the United States to create those above market returns and to fund something that's exitable, because I think that's a key thing that we lose sight of. I always say any fool can write a check. Where the art and the grace is getting out. And so, yes, people are making investments in other countries because there's applications of things that have worked really well, like Uber in the United States. So why not take Uber or a variant of it around the world? I think that makes a lot of sense. But now we have the excitement of AI at home and watching to see how that shakes out. But I think we're going to see some new massive entrants in this space that are going to be really exciting over the next couple of years.
Yeah, and of course, you've seen so many startups, but you also
Right.
saw so many VC firms. Have you seen any new innovations in VC?
So the VC model is really interesting, and that's evolving as well. We went to, I think, with the sort of the go-go years here that we've had in 2020, 2021, 2022, people really ramped up their hiring and they became very bloated organizations thinking that they had to do all these things for people, like bringing on marketing staff, bringing on content creators, bringing on in-house investment bankers to help the firms, and really focusing on driving scale for them. That has always been sort of a curiosity for me because having started in VC in the late 1990s, and that was a time when you picked the best founders with the best ideas who actually knew how to execute. You didn't take someone with a mediocre idea and surround them with a lot of platform people. And so I don't know how successful it's going to be. It's sort of, in a way, I hate to say this, but putting lipstick on a pig. And if you're not starting with the best founders in the first place, the real top exits are so few and far between. I mean, Aileen Lee called it a unicorn in the first place for a reason. They just don't happen that often. They're very, very special people that start these companies. And I think finding those people is much more important than building a whole platform and a lot of resources around people that are just okay.
So if you don't have the agency model, building
Yeah.
that big platform and helping
Yeah.
founders and on all of these aspects of their companies, how else can you help?
I think, well, but I always say I invest in founders who don't need my help, and then I
Okay.
go ahead and help them anyway. Finding those people who really are well networked in a space and who have experience in a space, preferably startup experiences, is much, much better. And it's not necessarily from the top universities, although I know there are people who focus on that. Finding those people and doing the hard work to get to know the real deal is, I think, much better use of time. Personally, from my perspective, that's my strategy. I do know people who really feel like they can be successful on the other side with that agency model, but that's just not how we work.
Okay. So in general, how do you see the future of our industry in the next, I don't know, 5 to 10 years? The future of the venture capital model, the venture capital asset class, the returns.
Right. Yeah. I think it'll be interesting to watch. And like we discussed, I think it's very dependent on where the exits are. People are always chasing the exits. So if we start to see large technology IPOs going forward and holding and being successful, I think you'll see people trying to swing back into it again from a limited partner perspective, because I think the investors are still here. And so there's a lot of people out there that are still trying to get funded. I think we're seeing a lot of technology innovation in our firm. We're using some pretty interesting things. We're just starting to use harmonic AI to target different companies that have attributes that we are looking for. I also use read.ai, which helps me with note taking and synthesizing information. But at the same time, if you're focused 100% on the quantitative metrics, I think you miss a key element, which is the qualitative metrics, which are the nuances with a founder. Are they respectful? Do they have charisma? I don't know how you quantify charisma. It's
Can
something.
AI help us in finding and discovering charismas and founders?
Yeah, interesting sentiment analysis companies out there, right? But I don't know if charisma could be faked for the sentiment
Mm.
analysis. So I think I have to tell you that one of the toughest parts about our business, as you know, is all the inbound and trying to deal with all the inbound. And I think that the mail companies are getting so sophisticated, and they're employing a lot of AI, and they're scraping our LinkedIn accounts and scraping our websites to send us emails that say, "Hey, dear Tracy, I noticed that you had lived in Japan before, and so did I, and I noticed that also too that you invested in Loop, which is such an exciting company in the care economy. So therefore, you're going to be very interested in the basketball team in Bolivia that we're selling shares in." And so, you know, it's a terrific waste of my time to have to read emails like that. There's probably an algorithm out there that can help solve for that, but I don't know about it. I'd love to learn so that I could sort my emails a little better.
Well, you mentioned the cold emails, those
Yeah.
emails that you receive, but some of them are genuine, right?
Yes.
And
Yes.
not every founder is connected to the who's who and get to you. How
Right.
can they reach out to you or to other VCs, not necessarily you, to other VCs
Yeah.
if they the network?
So, Ahmad, this is a really interesting question, and it's a really tough one. So, sometimes when I think about that question, it worries me if a person doesn't have a network, are they going to be a really effective founder?
Mm.
So maybe that person, instead of starting a company without a network, should go work for a company in the space that they find is interesting, develop that network so that when it does come time to start a firm, they have a fully developed network, not just amongst the investor community, but also too in the customer community and partnership community to help build and scale a company. Things are so competitive. And it may be controversial to say, but I think maybe people that haven't developed those networks maybe shouldn't be starting companies.
Mm. Okay. So before we end this amazing conversation, Tracy, you focus on age tech at 1843. I read that
Yes.
Brian Johnson spends $2 million to reduce his biological age. Did you
Isn't
find
that
a
amazing?
cheaper way to do that for us?
Absolutely. I have to say that one of the most pleasurable parts of my business is that we invest in a lot of things like help for caregivers for dementia patients and things around menopause. But then also too, I get exposed to a lot of interesting, health span expanding either devices or supplements or tests and things like that. And those aren't necessarily things we invest in, but boy, it's sure fun for me and exciting. In fact, I just did the Pronovo scan, which I wrote on LinkedIn a few posts about my experience with it, and being able to participate in cutting edge innovation like that and taking hold of our health and what we can do about it and having more data around it, I think is just really exciting. Something else I do too is Inside Tracker, which I think is really interesting to see that I think they track 52 biomarkers. And it's nice to see that you can have your blood drawn a few times over the course of the year, where when you go to a doctor, it's one point in time. They don't know if you'd exercised the night before, which can affect your blood work, or certain meals that you've eaten over the last couple of days. It's nice to see trend line. Tracking our data with the Apple Watch or the Whoop or the rings, I think, are really interesting aspects and ways that we can take a hold of our own health and do something about it, be proactive about it.
That's awesome. Is there
Yeah.
anything you want to mention that I did not ask you about?
One of the most interesting things in this space that I found is and unfortunately, we did not invest in the company due to the valuation, but there's a company called OneSkin. It's a nanopeptide company that actually penetrates and it kicks out sentient skin cells. I'm a big fan of the company. I've been using the product for years and years and really love it. So if anyone wants to look a little better and have healthier skin, I highly recommend trying OneSkin.
Okay, I'll check it out. Well,
Yeah.
Casey, thank you so much for joining me today.
Of course, such a pleasure. And thank you for everything that you're doing. It's great to have this conversation with you.